Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to solve April 2023 University question paper under the subject Financial Reporting and Analysis, also known as FRA. This is the second part of our video series based on solving April 2023 question paper. Again, a very important video for all the TYBBI SEM 5 students. Okay, in our previous video, we have already solved question number 2. Now, in this video, we are going to solve question number 3. Now, since there is a limitation of time, so the sum which was most easiest and very scoring, okay, I'll be picking up that sum and we are going to solve in that since there are options, okay. So, question number 3B, one of the most easiest sum and much more better sum as compared to the other one. So, we are going to solve that sum now. The question states that Sunflower General Insurance Company submits the following information for the year 31st March 2021. They are giving you all the particulars, direct business and reinsurance, and they are giving you two adjustment. Expenses of management include 35,000 surveyors fees and 45,000 legal expense for settlement of claim. And the reserve for unexpired risk is to be maintained at 40%. The balance of reserve for unexpired risk as on 1st April as the opening balance is given as 24,50,000. Okay, now let us see how you need to solve such kind of sum. Very simple. First, the most important thing is always note down the format. Okay, so this is our format. The revenue account for the year ending, whichever year it was, 31st March 2021. Particular schedule rupees. Under particulars, we have like the first is the income part, or you can say premium earned, PNL on redemption, other interest, dividend, and rent. We get the total commission, claims paid, commission paid, operating expense B, and then when you subtract your income minus your expense, you get your operating profit or operating loss. Very first thing is premium earned. We need to find the very first part, schedule number 1 under premium earned. Okay, so this is our format for schedule 1 premium. So premium on direct business. So now let us start filling up and check what are the values that are supposed. Now, very first thing they're giving us premium on direct business. I can hear premium received on direct business, which is 66,75,000. So we note it down. Next is add premium on reinsurance acceptance. I can say reinsurance accepted 9,50,000. So we wrote that 9,50,000 less premium paid. Okay, less it's basically a reinsurance ceded. Okay, ceded meaning paid. So I can see here under reinsurance premium paid is 4,75,000. So it's a negative value. Okay, so add minus, we get the total as 71,50,000. That's like a premium. Okay, now from that premium we have to minus change in reserves. So opening of reserve is given as 24,50,000. We noted down that as 24,50,000. Okay, less the closing. Now here they told you reserve for unexpired risk is to be maintained at 40%. Now remember 40% on what? 40% on your income or the total premium that we have found. So 71,50,000, 40% we'll have to take. That comes to 28,60,000. So opening minus closing will get a negative value of 4,10,000. So now very simple. Total premium minus your reserves, we will get a net premium which comes to 67,40,000. Okay. So total premium minus our reserve. Since it was negative, if it would be positive, it would be added. Since negative, it will be subtracted. It comes to 67,40,000. Now, since we have got the schedule 1 ready, we will post it in our main account. So premium earned schedule number 1, 67,40,000. Next, PNL on redemption of investment. Now, if you look here, I've given you premium, claims, commission, and expenses, and adjustments are also given. So there's nothing related to your investment redeem, so it's nil. So there's no other income also which has been given. It's all expenses and claims which have been given the question. No interest, so everything goes nil, nil, nil. A total of your income side is 67,40,000. Now next comes the most important, claims paid, because now see claims mein there's opening, closing, receivable mein also there is opening, closing, claim received, claim paid. A lot of things have been given to us. Okay, so now this is very important schedule, claim paid ka. Okay, schedule number 2. First is claim on direct business. Okay, now see how to calculate that. Okay, on direct business, the claim paid was 42 lakh 50,000. But then there is adjustment number one. Expense of management include 35,000 and 45,000 expense for settlement of claim. So anything which is related to settlement of claims will get added to your direct business ka claim paid. So the 42 lakh 50,000 plus 35,000 plus 45,000 comes to 43 lakh 30,000. So that's a claim on direct business. Number one. Next, we need to add reinsurance accepted on claims. So claims on reinsurance. Now the amount which was given to us is 5 lakhs. Okay. After that, check if there is any outstanding available. Now, so you can see here claim payable, that is outstanding. Now always remember, closing we will add, opening we will less. Okay, so closing we add, opening we less. So 5 lakh plus 60,000 is 5 lakh 60,000 minus 87,000 comes to 4 lakh 73,000. So we note it down as 4 lakh 73,000. Okay, so this is done. This is also done. Next, less reinsurance ceded. That is nothing but it's a reverse. Ceded in this case means whatever is going to be received. Okay, so here's given that claim received is 3 lakh 25,000. Okay, again receivable may we have opening and closing, so add the closing less the opening. 3 lakh 25 plus 1 lakh 10 minus 65,000 comes to 3 lakh 70,000. So 4330 plus 4 lakh 73 minus 3 lakh 70, we will get a total claim, the value of claim as 44 lakh 33,000. Okay, now towards that we add the opening, add the claim payable, outstanding claim at the end and less at the beginning. So here I can see these are the two amounts which are pending. So closing we add, and outstanding will come in less. So 7 lakh 18, 6 lakhs 25,000. So 44 lakh 33,000 plus 7 lakh 18 minus 6 lakh 25,000 will give you a net claim which comes to 45 lakh 26,000. So we will put that in our claim schedule number 2, 45 lakh 26,000. Next is schedule is based on commission. So now let us see commission what we have. Now commission on direct business is given as 1 lakh 50,000. So I write at 1 lakh 50,000. Again, add reinsurance accepted. So add may we have reinsurance 11,000. Less ceded is 14,000. So that comes negative. So 1 lakh 50 plus 11 minus 14 comes to 1 lakh 47,000. So our commission value is 1 lakh 47,000. Okay, last operating expense. Now for operating expense, I've not made a schedule. We'll take it calculated orally itself. Operating expense for management is given as 2 lakh 30,000. Now from the 2,30,000, we have already, there are some expenses that were given. Expense of management include 35,000 and 45,000, but that was for settlement of claim. So we have already added in claim. So we will subtract 35,000 and 45,000 from 2,30,000 to get the operating expense ka value. Okay. So 230 minus 35 minus 45 comes to 1,50,000. Oh, that is just one more zero after this. Okay. 1,50,000. So the total comes to 48 lakhs 23,000. Okay, that's our total claim or total expense ka. So now total income minus total expense 67 lakhs 40,000 minus 48 lakh 23,000. Our net operating or the operating profit that we will get in the sum will be 19 lakhs 17,000 rupees. Okay, so this is how you all had to solve this particular sum based on general insurance, where they had given us sum based on direct business and reinsurance. Okay, so you just have to, similar kind of question will be if they ask you, this is how you all have to solve this particular sum. Okay, now I hope everyone have understood this. This was from question number 3 from the paper April 2023. Chalo, I hope everyone have understood that. With that, we will be ending this video here. Thank you.